Folks, welcome to my rate update with Dan Frio. My name is Dan Frio, and today is April 24th, 2023. So what we have in the markets today is, actually, it's a good day for mortgage rates. So what we do on this channel every day is I try to talk about real estate. We talk about the real estate market, housing, and mortgage rates, because we want to figure out, should you be renting? Should you be buying? In your local market, because you can't analyze the whole market to say, okay, housing's bad, because in Oklahoma, you might not be crashing like it is in San Francisco. You might have it in Cleveland, Ohio. Is it as robust or bubbly as it is in Austin, Texas? No. So you guys need to make sure, how is your local market? That's my goal here. So without further ado, let's get over and figure out what's going on in the markets this week. So what you see on your screen is what I see on a daily basis, and it's right here. The reason why I do this is I want to figure out what's going on with mortgage rates. So I followed the 10-year treasury, and I really followed the MBS market, the mortgage-backed securities market, because the yield on this mortgage bond is actually the biggest piece of your mortgage rate. Okay, so what we focus in on here is this is what's going on in the price of the mortgage-backed security bond, and this is the difference. You can't see it, but right now this says plus 17. But all you need to know is this number. If this number is up, that's fantastic, because the price of the bond's going up. That means yields or rates are coming down. That's all you need to know. There's an inverse relationship there. So we want to focus in on this week is there anything in the news, especially the economic news, that might play a role in housing this week? Well, on Monday, usually on Mondays, we really don't have that much stuff. But Tuesday, Wednesday, Thursday, and Friday this week, Friday's the big day. So let's just briefly go through the economic calendar for the week so I can prep you guys. Is there anything here that really should throw a curveball to the markets? So the first thing we want to see is building permits. We really want to see this to see how many houses are being built, okay? Because the reason why we want to know that is we know there's two pieces of this market. There's existing homes, and then there's new homes, okay? Existing homes are people like me. I live in a house that already exists. I'm not selling that house because I refinanced a couple years ago to the lowest rate in history, and I'm really reluctant to sell my house. So we need the housing on the builder side of the equation to uptick, to have more product in the market, so we can at least have stability in housing prices. So you guys might say, okay, housing prices are crashing. Well, they're not crashing all over the whole country. And we're lucky that there's not excess inventory that would have exponentially made the housing market crash even more. So let's look at it this way, just basically simple supply and demand. Right now, you have the people that are in existing homes not selling because they have a fantastic rate. So you have a reluctancy there to add those homes to the market. Then we have new construction. That's basically what's coming into the market right now. So we need construction to really pick up the pace here. So we're really going to focus in on building permits. The next thing we're going to see is consumer confidence. I don't know about you guys, but this thing should be at 0, because my confidence right now in the economy is pretty dismal. So you're probably going to see this continue to downtick until we basically have just some stabilities in the markets. And then we have the next thing is new home sales. Okay, these are, again, you got to pay attention to the words here. This is new home sales, and then you have pending home sales, and then you have existing home sales. So please pay attention to the words here. So again, on Tuesday, we have new home sales coming out, and they're expected to kind of stay stable, but there's not as much inventory here as we need. And then the next day, on Wednesday, we have core durable goods. That's like refrigerators and ovens and bigger appliance stuff. We're focusing in on this because we're thinking the consumer is going to start really tapering back their spending, and we're going to focus in on that the rest of this week as well. So you're going to see core durable goods orders went from -1 to -2 as the estimations. We're going to see how that comes in, and then crude oil inventory, we're going to skip that for now. Then we're starting to see how 2023's GDP is coming in. So remember, the old definition of a recession was 2 negative quarters of negative GDP, or 2 quarters of negative GDP. Well, I think they might have revised it back to that. I don't know. We'll check that soon. But they came up with GDP. They're expecting it to come in at 2.6. The economists are expecting it to come 2.0. That's a big difference, folks. Initial jobless claims is another area where the Federal Reserve is like, we need more and more people losing their jobs because we need more and more people to stop spending. So they're really hoping the initial jobless claims take a spike up. And then we have pending home sales. These are houses that are under contract. Did they actually close? And then on Friday, we have the one number, the big inflation number that the Federal Reserve truly monitors and puts this in number one spot is the PCE. This is the inflation number that the Federal Reserve puts the most weight on, and that number is coming in on Friday. So we'll look at that. When we talk about inventory on housing, and this is how it keeps the prices where they are. So think of it this way. We have demand right now that's pretty dismal. Okay, it's not as robust as it was in 2019, 2018. We're still pretty darn busy, but it's not as robust because there's just no products out there. Okay, so when you're seeing this as a housing April 24th weekly update, inventory increased 2.1% week over week. That's fantastic news. But again, folks, don't judge a book by its cover. So we really dive into it. And it says inventory was up 52.5% compared to the same week in 2022. That's fantastic. However, it's down 52% from where we were in 2019 prior to the pandemic. So we used those numbers, pre-pandemic numbers, to figure out that's the last time we had normalcy in the markets. So we're not down. We're not there yet. We're actually 50% lower than where we were in 2019. That's not good news. And so now we want to look at where are mortgage rates going for the day. So Mortgage News Daily, they are down. If you go to their MBS thing, it's been down for about a week. So let's go back to my chart here. So we have the MBS market right now. The MBS 6.0 is up 17 and the MBS 5.0 is up 31. That means rates will probably come down about in 0.1 maybe, maybe not even that. It's going to blend this. So maybe 0.7. Rates are going to go down 0.07, really nothing there. So let's figure out where the market's closed on Friday, because Mortgage News Daily has not yet received all their quotes back yet from all the banks to see what are the mortgage rates at. So what you're seeing on your screen right now is Mortgage News Daily. They post the top 6 products people use when they're buying or refinancing a house. Here's where the rates are, folks. Okay, this is a blend right here, this 30-year fixed rate. You're like, okay, that rate's lower than what I got, or that rate's higher than I got. Let me explain what this rate is. This rate is for somebody looking to buy their first house, okay, with a 740 credit score, putting 20% down. It's their first house, and it's going to be their primary residency. So 740, primary home, first home, 20% down. That would be their rate. Okay, on a national average. So Mortgage News Daily surveys mortgage lenders all over the country, and they ask them that question, and here's where those mortgage rates would be. Okay, so again, guys, remember that's the national average. So I'm going to discontinue my Friday or my weekly or daily live events at 3 o'clock. Just not a lot of participation there, and I think it's a little bit overkill. I'm coming to you guys this week on several different channels, and I'll be posting that in my social media platforms this week. I'm going to be on 2 other channels this week as a special guest. Hopefully you guys can join us and help support those channels as well. So God bless, guys. Thanks so much for watching. If you please can remember, don't forget to give us a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. Thanks for watching, guys. God bless. I'll see you tomorrow. Bye-bye.